Numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy, a starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Welcome back to NinjaTrader Live. I'll be your host, Tom Schneider, CMT. Well, actually, I'll be the co-host because we're having a segment called Develop Your Edge with Anthony Crudele. Anthony, how you doing?
Doing great, Tom. I'm at home today. A little hurricane hit in Florida, so with everything closed, and woke up to power was blipped out last night, and so I'm doing it from the home front today.
Well, thank goodness you're not taking the brunt of it. Right?
Yeah.
This is supposed to be a big one, and we know you had what was it, last year or 2 years ago? I know your area got a little bit inundated, so I'm happy to see you here with power.
Yeah, Irma, that was not a good week there down here in South Florida. But I know I'm thinking about those people that are going to get directly impacted from it because it's no fun, and this one does seem like it's going to gain really a head of steam getting up into that panhandle area. And it's funny, like I'm in South Florida.
Yeah.
And it was like, it even woke up myself and the dogs last night. Like it was getting pretty windy, minimal debris outside. I mean, but really you just would look at it as just a bad storm. It's nothing crazy. And so you know that when that thing is coming at you right now, that thing's moving.
Yeah. And hopefully anybody who's watching and is in the path are doing okay. I've got relatives up in Tallahassee, and it's not easy for them to move around. They're a little bit older, so hopefully they're okay. But good to see you here. What's been going on today?
Well, this morning I put out gap and go for E-mini S&P because I think that this gap higher is one that I'm looking to buy. I did one trade this morning and I scratched it. I bought 12 halves and I scratched them. And it was funny. If you don't know what scratch is, put it in the comments because we were having this conversation, Tom, myself, and Jimmy, and we were saying, they're like, "What'd you do today, Anthony?" I'm like, "I bought 12 halves and scratched them." And they're like, "I wonder if everyone knows what a scratch is." Scratch is a break-even trade. Hopefully, you do know what it is. I mean, I learned how to trade by scratching trades. So I think that that's such an important aspect of trading because my goal when I first started was to be able to scratch every trade that I was in, meaning that I was able to buy it or sell it. And if I didn't like the trade, I had enough room in it to be able to scratch it, right? So that's really the philosophy that a lot of pit traders and scalpers are taught. That's like the first thing you're taught.
Well, it's such good. It gets you conditioned for being able to recognize losers and cut them rather than staying in a trade because you want to be right. Right. So it kind of flexes that muscle of okay, I have the room to be flat rather than taking a loss before, it's kind of that precursor to taking a loss, and knowing when to take a loss.
Yeah, and so let's go over to the charts today. Let's get right into it and explain why I felt today was gap and go. So when we look here on a daily chart, as everyone knows, if you've followed me at all, you know that I watch daily charts, Bollinger Bands, 20 period, 3 standard deviation. And so your stock settings aren't going to be that. They're probably going to be 14 and 2 or 20 and 2, depending. And you want to change them to 20 and 3 if you want to follow along what I'm doing. And I like a 20 period, 3 standard deviation. And so that's what I have up here. I also have just the 8 and 21 moving averages just to give me an idea of what's happening in short term to medium term, right? I don't care if you use a 5-day or a 10-day, which I've used in the past, and then, if it's a 20 or a 21, I really don't know that they matter much. I'm not trading off of these moving averages. I'm using them as a guideline. I'm looking at slope. I'm looking at if we're holding above short-term moving averages and medium term, and I'm really just looking at reactions. Normally I have the 34 up here. I don't know. I took it down the other day. I don't know why, but nonetheless, that's what I have up here. And what I have boxed out also is the Fibonacci I have. Well, this says 76. It should say 70. I'll go back and change that. I was messing around this morning with some of the stuffs, but nonetheless, the point is I'm looking at 70, 50, and 30% on here. And the reason why I'm looking at that is because I want to be able to see those levels as my support and resistance levels. And so that's it. I mean, there's nothing really to think about for me when it comes to that. That's just what I use for support and resistance. And so when I'm looking at these levels, it breaks down really my boxed off areas for where I think that primary trend will continue or there will be mean reversion. If you go back to where the Bollinger Band peaks where I originally drew this, you could see that the market rotated lower off of initially when both Bollinger Band peaks were coming in. So they were coming inward and we were in contraction. Then the market went down. So that 70% line was a key for me because once we close above it, then we're in this top boxed off area, this top bracket. And I think that the market's going to continue to grind higher. And so we've had multiple daily closes above it, multiple daily closes above the 8-period moving average. And today we gapped up higher on a new high. So that's why I said gap and go. And so when we look at the S&P versus the NASDAQ, the Russell, the Dow, they don't have the same look of a setup. And I can go over those charts, but you guys can pull those up on a daily. But nonetheless, I'm looking at this. I want a market that's in this top boxed out area is important to me. And the reason is I think it's important to understand why is because when we were making this high right here, and I don't know how much I've explained this even before, Tom, when the market makes this high and this Bollinger Band peak was made, this was a 3 standard deviation move at this point, right? And so as the market was expanding and making highs, okay, as the market was going up and here, and then all of a sudden it paused. That was the peak of what a 3 standard deviation move would be.
Right.
Now, to put that into perspective as to why that matters to me is a lot of times markets, like a 3 standard deviation move is typically a pretty good high or low. You don't see a ton of them reached, right? I mean, you'll see a lot of 1 and 2 standard deviation moves in the S&P, especially in the NASDAQ. You'll see them on, no problem. But very seldom do you see a market go in a trending area and hit a 3 standard deviation move in the S&P. It's not very common. And if you go back and look here, it's a similar situation where the market went up and then the market peaked. This was the 3 standard deviation peak from the move. As the market started to stabilize, it went back up. And I call that unfinished business.
Mhm.
And what I mean is that the market eventually worked its way to get to that 3 standard deviation point. And of course, it continues to move higher and higher because that's what Bollinger Bands are doing. They're always projecting out. And so that becomes a very important point for me because as this move gained energy back lower with the sell-off, right, as we remember back in September, that's why I actually kind of got a little bit bearish here. And then because it got below my 50%, but as it quickly regained it and now has regained this, it's taking that momentum and shifting it back up top. So
Yep.
now when you have a gap higher into this area, this now becomes a potential target for me, just above 6,000. It's on this chart, 6,019. And so that's where I think that the projected move is going for the S&P.
So Anthony, when we're in this top box, right, and you've got your target based on the 3 standard deviation band, if the bands that are still right now trending up, if they take out that level, are you going to redraw your box, or are you going to let it go and see if we hit that level and then redraw your box? Because we'll have, if these bands continue on this trajectory, we may take out the previous high on the Bollinger Band. Would you kind of reframe the playing field?
Yeah, it's a great question because, the question is important because if the market goes higher here, does that point still have relevance, right? And so when you go back here and you look at this previous point right here, if I were to just draw a fib there, I've got the standard fib settings on there right now. You can see that obviously the levels are going to be a little bit different. And then what happens is that this low was taken out down here, and then this high was taken out, right? So this is the new set of volatility. So what would happen in a scenario where if the market was going higher and this top Bollinger Band took it out, I would say that the probability of us going to get it now is increasing. So in this scenario here, so the fact that the market went up and took out this previous high, right? So let's this is important, and it's going to play into a lot of what we're doing. So see how this market took out that high right there. At this point, if we would have kept going up and this Bollinger Band wouldn't have went down, I would have really thought that we were going to go up and test this level, which was basically 6,000. But because the Bollinger Band started to come back inward, it immediately told me, guess what? It couldn't go and get it. Now it's going to retrace. So now the same scenario is going to apply here, right? As long as the market, continues to go in this direction and the Bollinger Band stays here, I'm projecting that this is going to get hit. Now, the only way that comes out of play is if this Bollinger Band does what it did here and it starts coming back inward. But as long as it stays outward and going up, that is still the target.
That makes sense. Really interesting behavior when you did make a peak on the Bollinger and it starts to come in, and that market turned down before or after the peak on the Bollinger Band. It's just these Bollinger Bands are so telling, I think, of what happens to the market.
They are, and you have to have them updating on every tick as well. I think that's extremely important. Some of you might have them standard on bars close. You don't want that. I want to have them on every tick. I want them to constantly be moving. And, and the whole point of this is that this is never going to pick the high or the low perfectly. It's never going to happen. And I don't really even anticipate any strategy that can really do that, right? Some may argue that. I question that. But nonetheless, either way, my goal with this is to understand environment. That's it. I don't need to try and pick a perfect top. I don't need to try and pick a perfect bottom. I need to know ebbs and flows. And what happens here in this situation, why this is important when it starts to come back in, that I think we're going to rotate lower, is because if the Bollinger Bands are no longer expanding and we are in an area where we're trying to expand the ranges, where the market's going towards a high, the minute Bollinger Bands are contracting, that's a sign. That's a sign that the upward move is losing momentum. It's losing its velocity, right? When Bollinger Bands are open, it's telling you that it's projecting a higher 3 standard deviation move from the current price action. So as it's moving up and the Bollinger Band is moving up, Okay, so like in here, it was moving up and the Bollinger Band was moving in. That's
Right.
telling you that, look, we're just out of gas. Like, it's like, hey, buddy, it should have happened already. It just hasn't. And all of a sudden, bang, it comes down. And
Yeah,
so
yeah,
now,
and
go ahead,
sorry,
Tom.
Anthony, real quick, you've got about 8 bars before it, or 8 candles before that, that goes into the calculation. And it's more than that, right? But really, you just see sideways motion, and before you hit that high before the drop, and it's just like, man, this is stalled, right? This is a stalled market. Even though the
And look at
volatility is
this
still
versus
going up,
now.
it's really relying on that previous move, and then that previous move runs out. Yeah, it's not just one bar calculating that that Bollinger Band. It's a bunch of bars
Correct.
that have been flat.
Exactly. And so when you look at this now, and this is why people can go back and see, I write my daily note every day. I've been saying, look at I'm only looking at longs and ES and YM, because the YM chart looks very similar to this. I don't need to
Yep.
pull it up, but it just does. Okay. And so what happens is that as we're building above that 70% line and it's hugging above the A period, and the A period sloping up, and you come back here, we're in like this scenario right now where it may eventually look like this. I don't know. But for now, I only want to be on the long side. I don't care that we went lower this morning. Does that mean, oh, all of a sudden, Delhi said that, gap and go, we're going to keep rallying? No, I'm looking to buy them. I mean, I scratched one trade today. And once again, I'm only looking for one side of the market, because trying to pick a top in here, this market could rip higher at
Yep.
any point in time, and the probability of going lower is smaller, even though we are going lower today, not by much. We're going lower from the regular trading hours open. I don't really care about that, because as a short-term trader, if I have to come in every single day and try and predict the direction right off the open, that's just too tough of a business for me. I don't
Right.
want to be in that business of like, oh, okay, I don't have a plan. Oh, today we're going down, I'm short.
Yeah.
The old me did that for years, and I was successful at it because I was a super short-term scalper, and I was just trading thousands of contracts a day, just like, an animal.
Right.
I don't do that anymore, because the machines are too fast and price is too wide now. And so I can't do that type of strategy in this. Scalpers today are scalping for, I mean, at a minimum, you're probably scalping at 1 to 2 points.
Yeah.
So it's like, that's even in an environment like this where it's pretty slow, there's a lot of slippage there. You might buy it and it go 2 points against you and you're stopped out, and then you're going to do it again and you do it again. Like, I'm not at that phase in my career. I'm not going to sit there and scalp for 2 points all day long. I want to
Sure.
try and find a direction that I want to hone in on, which I actually think is better for a lot of newer traders in general. Find that direction and just wait for a solid setup in that direction. It doesn't even matter if I'm right in that direction. I just know that I'm waiting for an A setup in that direction.
Right.
I hope that makes sense. Everybody's like, I don't care that we're going down today, and my big picture stuff says that we should be going up. I am not going to buy strength. I'm going to try and buy weakness. I'll show you how in a second. But the point of it is that I'm not trying to overtrade this tape. I'm not trying to like, oh, we're down, let me sell the rallies now. And I'm trying to guess that, and all of a sudden I get a ripper higher, and then it break. It's just, I don't want to have too many trades on in a tape where I believe confidently that the path of least resistance, the higher probability, sits with a direction, and that's higher.
Right. And this is a precursor to your intraday trading. I think those of you who haven't seen Anthony's explanations before, while you could use this for a swing trade, really what Anthony's showing you is this is a setup for the trading that goes on intraday, right? These are, what is Anthony going to do in the day intraday? This helps Anthony decide, what trend are we in? This is actually a really nice, like bullish setup for the intraday, right? Because we're in that top half, we're increasing, all the things are increasing. So with that in mind, Anthony's now going to show us the intraday part of it.
Yeah, so I actually have this on all trading hours, maybe just to appease Jimmy a little bit. I know he gets all twisted up when I'm looking at RTH only, but because we were so bullish overnight, I was kind of like looking at what was happening in the order flow chart. But
Yep.
nonetheless, you could see here's the first 30 minutes of the day, and you could see that basically opening range is the high of the day. And we started to come down. And I wanted to look at order flow in here and just take a look at what was happening. So you had some buyers initially on the open, try to get the market propped up. And then you could see these green bars are the high volume bar,
Right.
okay, of every 30-minute bracket. Of every 30-minute bar. And what I noticed after the first 30 minutes was, okay, the first 30 minutes was sitting right around 14. And I said, okay, there were some sellers in here. And then I watched how the market traded around this area a little bit, and then it couldn't sustain trade above that high volume area. And once it starts building lower high volume bars, it's like, okay, this is telling me at this point that the volume is building lower. So I have to be very cautious on my buys, and I have to almost wait for some sort of like little bit of a blip to come in and step in and buy it. And then maybe, you hope that it runs for you to the upside. I'm not still looking to be short because of all the reasons I said on a daily chart. And once again, this coming lower today, does that mean I'm wrong on my gap and go? Sure, maybe, but it's the point is like, how do I execute that? And I still think that ultimately I really can't be short. And who knows, I might be dead wrong. This could be the high. I really don't even care. As long as I manage it intraday the right way, that's all that matters to me. And so the next thing is, what I did this morning, and so let's move this over here and I'll show you exactly what I look at. So this is something that I look at on a regular basis, right? So we have, I have the opening range VWAP regular trading hours. Okay. I also have the all the hours on here right now. Once again, I was looking at the overnight a little bit just because I wanted to see I wanted to get some more information, but typically I'll look at the RTH only. It doesn't matter because my VWAP's anchored to there. And I have my Bollinger Bands just running on the overnight session. And here's what I look for. The opening 3-minute bar was lower. The VWAP started to go lower. Then what happened here, Tom, is exactly what I look for in my scenarios where the top and bottom Bollinger Band peaks started to come back inward. And so we looked at range expansion early on. So is everybody with me here? Like you had opening range, market went lower, Bollinger Bands are opening up. So if Bollinger Bands are opening up, that's telling me we're range expansion lower. When would I want to step in and buy? I want to step in and buy when I think that there's going to be mean reversion in this short-term downtrend, and I'm going to look to see if the market could rally back up and go back, back to in primary trend. So what happened this morning was I waited for the top Bollinger Band peak on a 3-minute and the bottom Bollinger Band peak of a 3-minute to come back inward. Mm-hmm. Okay. So what happened was that at this point right here at 12 even, I stepped in and I bought a little bit against me. I bought and I saw that this VWAP, we couldn't even get to it. And the VWAP is below. This is the opening 3-minute range. So many of you are probably familiar with me doing that, right? The opening 3-minute range, I just highlighted and I want to see where the VWAP is relative to it. Now, if the VWAP is below the opening 3-minute range, and when you go back to what I'm seeing here, so this is where volume weighted average prices, and this is where volume metric charts are very helpful to help me better trade the direction I want to trade. It's because it's showing me within the bar that there's just a lot of selling. So within the candlestick, I could see a lot of selling. I could see the high volume bar was 14, right? So you remember that? And so when I saw here, you look at the high of this move was 14. So you see that, everybody?
Right.
So if you look to the right, you can see that 14 was the high. So I'm like, as I was long from 12 half, I bought 12.75s and 12 quarters. Is basically what I bought. And I saw that the high was 14. And I'm like, okay, if this comes back and it can't hold, I just hit the bid. I'm just like, okay, maybe I'll be able to buy them a little bit lower. And I saw that the volume weighted average price from the open continued to go lower. And then we're staying below my 12 even. I'm like, this is a dead trade. And now look what's happening now. And so I go back to look at it as go, was I wrong? Yeah. Did I lose? No. And even if I would have lost a few ticks, who would have even cared? Because obviously I'm right for stepping away from it. But the point is that I have my bias coming into the day, which is bullish. And I still believe that, the bulls are in control for today, even though it doesn't look like it right now. I think that ultimately I'll watch for scenarios where these Bollinger Bands get expanded out and they start to come back inward, and where I see a little bit of a blip type move. And when the Bollinger Bands, let's just say they start to come back inward, like I would see here, I would draw those fibs on it, and I would look for then the market to come back to VWAP and then also the 50% line. So my target here would have been just to frame it, I was buying 12, trying to buy around 12 evens. Initially, I got a little jumpy with them and I bought in right as it happened. But once again, I'm looking for, if it holds at 30%, to go to 50% and potentially 70%. And the VWAP would be a little bit of a guide as an area that I'll use to rotate out of the trade. And so that's how I frame it. But the thing is, I can't stress this enough. I'm still not looking to get short today, even though today's a down day. And it's because the bigger picture time frame, if you look at this on a daily today, if we closed right here, I wonder if we should do a poll, Tom. If it closed right here today, would everybody say that the market's still in bull mode?
I would.
So it's
Higher
kind
high,
of like
higher low, higher close. Check, check,
higher
check.
low, higher low, higher high, even a higher body, however you want to dissect it. The market's coming back into trend. And so for me, where would I start getting bearish again? Because I think that's important to know, is where would this psychologically change my bias on a daily? Top Bollinger Band starts to come back inward.
Yep.
Right. And all of a sudden that would happen, and then we would have a new set of Bollinger Bands. And I would go off of that time. I would go off of that new set of volatility. Right now, the Bollinger Band, they're open like this. So you can have a lot of volatility in here. But as long as we stay above, this is where I bring in moving averages, the 8 and the 21, the trend is up. So why am I going to try and fight a trend yet? There will be plenty of time to fight this trend if I come in after a high is made. I don't want to try and pick the high. It's just too tough. I've been run over so many times trying to pick highs in the S&P that it's just like, I don't want to do it. It's like, I don't want to have that feeling in my body of where it's like, God, you got run over again. Good job, dude. It's like, I'd rather try and buy a couple of dips today, maybe get stopped out on one, scratch a couple and be like, hey man, I stuck to my plan. I feel good about it. And I feel good leaving for the day with a positive feeling, versus like, if I'm trying to pick tops of this thing and it gets one ripper higher and I lose, I'm going to be pissed.
Yeah, well, and picking tops, you run the risk of a move being exhausted, right? When you pick a top, you think, wow, you're buying strength, yes, but that has to be a breakout of a level for me. Otherwise, just picking a random top, what if this move is exhausted? What if we've done 100% of the move, even though it's not as big as the last move? Oh, well, you're right. It is nerve wracking, I think, to do that.
I just think for most day traders out there, if you guys can put yourself in the right mindset coming into the day, a direction you want to look, and you can have that set up for you. For me, it's like, a comfort zone. It's a warm blanket on a cold day. I look in, I only want to be long. If it starts breaking, I go, I don't care that I missed a short. I don't have FOMO in the opposite direction. Right. Period. Right. I don't care. I mean, I'll wait for an opportunity. It might come at 2 o'clock. It might come at, 12:30. I don't have a time set as to when that trade's going to come, but all of a sudden there will be a setup where the Bollinger Bands start to mean revert back in. We hold that 30% level. VWAP's way up there. My 50%'s way up there. I got a couple points of risk to make 10 to 15 points or whatever it is. And, that would be a good day trade for me. And so that's all I'm looking at. And it's all going to be about the responses. And you're going to go back and watch and see what's happening in volumetric. Can we build above a high volume area? Do you see a little squeezy low where all of a sudden selling comes in, where you see a lot of these dark red bars on the low, which means that the delta is really hitting to the sell side. And all of a sudden, maybe a little bit of a reversal comes off of that. Right now, every high volume bar is lower. So right now, you just I can't buy it. Right? Bollinger Bands aren't showing me that anyway on the short term, but I'll wait. I'm patient. I don't care. I don't care that I'm missing a break. And I think if everybody could just slow things down to that point, they'd have so much more success from a day trading position versus like, I'm long, I'm short, I'm short, I'm long, I'm short, I'm long. Oh God, Deli, I don't know what happened to me today. It's like, yo, man, I did 2 buys today. I scratched them and I'm like, okay, it didn't work. Just wait.
Right. It'll come around again. Anthony, thanks so much for everything. Do we have any other business to talk about?
Yeah, it's just always a reminder. Look at, I talked about ES. You've got micro ES as well, futures and options at CME Group. I'm someone who uses the ES, but I test a lot of my strategies on MES, and I think it's important for all traders to know that, you have these different options at different sizes. I know most people know, but you always get a lot of new people that come to futures that are like, Deli, I tried to trade the ES, a little too big for me. They didn't even know about a micro. So I just think, consistently reminding themselves reminding everybody out there that they have that, and also know that there's a micro Russell, there's micro NASDAQ, there's micro Dow. Like I've actually been doing some testing on a micro Dow just because I don't normally trade it. And even though the Dow is relatively a low tick value for me, and it's nothing, even on a day-to-day basis, it doesn't move like the NASDAQ or S&P. I've been testing some stuff on the micro Dow, just getting more acclimated to some of the things that I'm doing to sharpen up my skills with the execution, and I don't get buried in it. And
Right.
so I think once again, it just comes down to knowing that these products are there, to help best fit your risk management.
Awesome. Can't agree more. I mean, we talk about the micros all the time. If you don't know what is available to you, go to the CME website and just look at all the different contracts, but micros are your friends. We talk about that. Where can people find you, Anthony?
AnthonyCrudele.com and at Anthony Crudele on Twitter. And I know that I just want to say one last thing. I know that there's sim out there and everybody's so involved in these sim tradings for these funded and all this other different stuff, but there's nothing like trading live and the real thing. And if you want to really test your strategy, and if you've got the capital and you're normally an ES or YM or RTY trading trader, I have found that the micros are a great tool because you actually get filled on the amount that you would get filled, and you actually see how your stops would be run. You in live action, there is nothing to subsidize that. There's nothing that could train you for that. So I think learning more in micro settings is so much more beneficial than sim if you can afford that risk management.
Awesome. Thanks, Anthony. We will do this again in 2 weeks.
2 weeks, buddy.
In the meantime, stay dry, stay safe.
Thank you. See you, everybody.
All right, good to see you. And we'll be right back. Jim and I will be doing some chart review when we come back from the break.
So, you want to be a trader? Well, you should know you're not alone. Over the